All right. Good evening, guys. Thank you, Brombo, for the invite once again. The last time I had this, I was on this platform. Unfortunately, my audio wasn't very clear. So today I'm using my phone. To those that use their phones to trade, this session will be an advantage to you. But those that use their PCs as well, it's the same charts. It will work as well. So without wasting much of our time, since we started a bit late, I want to talk about market structure. When we are trading, we follow structures that we follow. Though we do it and think we do it our mind, not knowing that we are following a structure, but there's two structures that we follow. That's the bullish and the bearish. Following these structures, we can determine where the market is trying to go and where price is trying to reach. So when we are saying bullish, we mean buying. And we are saying bearish, we mean selling. So by tracking each day, the high and the low made, each day makes a high and a low. By tracking those, the highs and the low made, we can determine the structure which to follow in the market. So without wasting much of the time, I want to mark one day, one day the high and the low. I'll be using my phone, and I'm very, very sorry, guys. Because of my elder, I would have loved to use my PC. So I'm marking this day on the 21st of April. I'm marking the high and the low, right? So this is the high and the low of this day. So when the market breaks this lower low, this low made, we would say the market structure is shifted to bearish. And if it breaks up this other high, it's now shifted to bullish. But if you are trading, we can't always be saying when the market just breaks the high, it's now bullish, so let's buy, or if it breaks the low, it's now bearish, let's sell. We have to wait for a confirmation tool that we use, that we can take a trade and have a safety that we are taking a trade, knowing fully that this trade will yield into profits. So our confirmation tool, it's a break and a retest. That's the concept that I would want to talk of. So many people use trend lines for their break and retest. But what I've realized and gathered is by just following the high made and the lows made and using only these two lines, we can actually have successful trading and have profitable trades. So without wasting much, I would want to go to the chart where there was a break and retest, a clear break and retest where it happened. So I will just use this other day. I'll mark this day, this low. Right, I'm marking for reference sake, I'm marking on the 13th of April, sorry. Right. Price goes up, makes a high there, then drops, then on this following day again, drops again. And look what it does, it comes to retest this line. So these are the type of trades that we'll be talking of a break and retest. This is the concept where it is applied. But after a break, we don't chase price, guys. We wait for a retest. These are the retest type of trades you'll be trying to observe and take in the market. Yes, a retest might come on where there's not a high. Those are, you don't take such a trade, but you try to take a trade where there's a low, a high which is being tested. This is where we will get more opportunities. Like this is a retest and retest there. On these areas, you'll be looking to be a seller. But someone asked me, why would I just take a retest there? Or what's the use of you saying, let me just take a retest there? Now, let me look for another example there. So this phenomenon happens almost every day in the market. A break of a high and a retest of a high. It happens almost each and every day, but you'll be not just knowing what's happening. All right. Same applies on this day as well. because we don't chase price. And I said, if you break a high, this is a high broken, price goes up, comes back to test this line. So on the retest, this is where you actually looking to take your trade. There are many examples that I'll keep on showing, but the concept is a break and retest. And you're taking the trades on the retest of the high or a low broken. That's the concept. This phenomena happens in all charts that you could try to happen, you try to trade, because markets each and every day they make a high and they make a low. So by tracking those two lines each day and noting where there's a break, you can actually be a profitable trader just trading those two lines each and every day. Like another instance, this is another instance where there was a break and retest. So that's the concept, break and retest of a high or a low. On this day, on the 31st of March, price comes, makes this low. On this day, it just breaks up, goes back out. Then check what it does. It goes back, down, drops, then comes up to this point to give us a retest. So one might be asking, does a retest have to happen on the same day? No, a retest which gives you 100%, like a probably 90% high chances of panning out, is a retest where price has to close and slip above or below the low or high made. It is not safe to take a trade where the retest is happening on the same day the break is happening. Why so? Because the high has not yet been determined. If you're to be trading, if you're to be using this day on the 31st, on the next day, you want to trade this day, check what happens. Price will break down, but quickly doesn't close below it, then closes above it. So such a trade, what I'm trying to say, try by all means to take a retest where price is to slip or close above or below that high. There, okay, fine. Let me just make another example where you just master the concept for you to just, so I actually call moves because of this concept. By just looking at where my highs and lows are, looking to the left of my chart, I can actually see where retest is likely to happen and call a trade. By just using these two lines, nothing fancy added yet, lines tracking the high of a day and the low of a day, retest happens. Right, let's look at this one. This one I called that no forum of EU buy. It was before the coronavirus started happening. Right, this is where it took place on the 20 of February. Right, market breaks. Let me zoom in there for those that really would want to see. Right, this was a high made. This day, market breaks up. We said we don't chase price. You don't chase this break. You wait for the retest. And this is a perfect clear example where price slips above and closes above the high, this area, then it comes to retest this area, then you are a buyer there. We will discuss on the entries here because of, I will discuss in the next concept how you would have really taken into account this week and taken the trade there for you to be a buyer in holding up to this, holding up there. All right. So without wasting much of the time, I would want to talk of higher time frame. Let me keep on using EU. Right. Break and retest concept, guys, works in all time frames. Its market is fractal. You will find a break and retest happening in all time frames. It is not limited to only the 1 hour chart. The reason why I was doing it on the 1 hour chart, where we are clear, it's because we would want to clearly see the 24 candles made in a day and clearly see the other candles of other days, and you can clearly see where the highs and the lows are being made for you to be able to shift your lines and put them on a day. So one would ask me, how would you be trading on such a day? So on such a day, I would have put my low there. That's Monday, opening of markets. Then put my other line there. Then be shifting my lines daily and noting where there's a break and a retest, where there's a break in the structure. So I was here talking about it being fractal. What I'm trying to say is it happens in all time frames. You find a break and retest in all time frames using the same concept where a low of the month being broken and retested to. There's a clear example which is here as well. That line there, that's a low made in this year, or that was 2012. That's a low made there. Then market rallies up, comes back, breaks this area, goes down, then comes back up to retest this low. So this concept applies in all time frames. Even if I had to go to the weekly, if you zoom in, you'll find retest happening in all these time frames. Right. So I was about to explain the issue of higher time frame. So when you are analyzing, we would try to analyze from the higher time frame, because we retailers, we do not actually move the price that we'll be trying to trade. We only trade what the market maker is setting up for us. So for the past 2 years, it is clear that EU was falling. So by all means, you wouldn't want to be a buyer in such a scenario, but be a seller. So the concept of break and retest, you would want to inline it with all your sales and try by all means to minimize the buys that you'll be taking in the market because of the higher time frame you be trading. So, and the next concept is after break and retest, it's a fake breakout. It's the same concept which is next to the break and retest, because of fake breakouts happen when we say a break, a retest doesn't come, then the market runs away from from the test you'll be expecting, right? Same lines that we use, a daily high and a daily low, the lines that I always use, those are the two lines that I trade with. I'll be adding more concepts to these lines that I'm drawing. That's the high there. Then this day, this was the low made. So I would want to explain the fake breakout concept. Because I was saying EU in the past 2 years, it was falling. Then it comes a time that to those guys that draw trend lines, they would have drawn a trend line like this one. I'm not a trend line guy, but you would have drawn trend line like this one. With time, I'll be adding the more concepts, adding until we have a system that we now be using, right? I would come to this day, then on the 13th of March of April, right? A higher time frame, we said Euro US dollar is selling. Then on such a day, we are about to reach our support and resistance area, our trend line there. Then on this day, on the following day, EU breaks up this high, meaning the market structure is shifted to bullish. We are now expecting a retest to buy. But look what happens. The market turns and falls away. This is an example of a fake breakout. So above highs and below lows, people put their stop losses hoping they'll be not hit. This is what the market maker knows. And in this day, people knew the market was going to sell because we were about to reach the higher time frame support and resistance. People would sell here and start piling up their stop losses there. And before the market goes, it would want to induce more buyers. People would enter trying to thinking the market is still going up, and the market maker will take stop losses there. Effect will be this drop. This is the area where you'll be trying to take your trade. So this is an example of a fake breakout trade that you would take. Then there's an example where we are trying to catch a reversal, to retrace a retracement trade where you a fake breakout for you to buy in this instance, like this one. These are the type of trades that I don't advise people to take the retracement trade, because a lot of people get caught in these trades. So I will note the high and the low. So each day before trading, that's what I do. I note the high of the previous day and the low of the previous day. So wait for me to see where the stop losses are hanging. So on this opening of this day, the market drops, then fake fakes it fake a fake breakout occurred there to buy and start, and the market never came back to test this again, then went up. These type of effect breakout, they are not easy to get, and they require someone who really knows what he's doing to take this type of a breakout. I do not advise people to take this type of breakout. I advise people to take breakouts where you are in line with the trend. So let me find another fake breakout which is in line with the trend. These type of fake breakouts, they happen each and every day in the market following the trend. There's this other one here, a high made there. The trend is sell for euro US dollar, and the market maker will fake it up to induce people. We're coming on this day. This was the day. The market rallies up. Many people are buying this. Those that were correct, that had already seen the sell, would have gotten here, and they're putting their stop loss above here. But before the market maker takes this sell move down, he takes this liquidity up there. That's taking the stop losses up there. So that's when you take your trade above a high. That's when you take your trade. Then you take a fake breakout trade down there. All right, without wasting much of your time, the next concept that I would want to talk of, this is the OICT now. So when trading, you are trying to add these concepts together to come up and map up and come up with a trade. I'm going to talk of order blocks. If we are trading and looking at the area where the market maker was doing his job, we would find the characteristics of how he was trying to manipulate price. There's a saying where people saying when the market maker is buying, the retailers are selling. And when the market maker is selling, the retailers are buying. This phenomenon is that's one that I would want to discuss. It's called in an order block. Right. What's an order block? It is the last opposite candle after a displacement has been made. Displacement, that's distance of price, a huge displacement of price, where we see price moving from a place very quickly and with a lot of people that is leaving that area. So I want to discuss about this area here. So for an order block, I'll mark it with a triangle. Oh, all right. There. Right. I would want to talk of these two big candles here, this bearish candle. That's a big displacement of price. This is like 2 weeks of price falling down. Where was the market maker? Where did he do his selling? He did it in this area. These are the two candles where the market maker was actually selling, and all the other retail world was busy buying. Because when you are trading, when you see such a week, it means the price is rejecting to go lower. You would buy, put your stop loss down there, and say, I'm in a swing trade and I'm holding. And whilst you're busy holding, and the market maker will be busy selling all his orders and putting his orders in these green candles. So let me mark my area where I would say this is an order block. So an order block is the last opposite candle before the displacement took place. Displacement is the huge movement of price in a direction. We have to note the opposite candle of the displacement. The displacement was these red candles. What was the opposite colored candle? This green colored candle. This is our order block. This is where the market maker was doing his orders. So in the future, when the price is trying to reach this area, the market maker will either add his position or try to protect his positions. Because market maker doesn't trade with a stop loss, he'll be moving price back and forth, trying to be profitable. He took his orders in there, he's going to try to protect it in the future. Because of these huge displacement, there was a big price action which happened in this area. So when noting an order block, guys, you note the body only, not the wicks, the body only, because that's where the price action took place. Right. Sorry. All right. Trying to highlight it. So after noting an order block, we said we don't chase price. We have to wait for price to come back in an area where we are comfortable to take our trades on. Because the moment you try to chase these candles, you never know. They might not be the falling the way they are. That day they'll be reversing on you and asking yourself what's happening. So we'll be waiting for price to present itself to us, then we take an order. So in an order block, what we are looking for is price to touch it back into the order block, then we can be taking our trade. Price dips down, then there it goes back into an area where the market maker showed interest of selling. That's our order block. That's the area where you start anticipating your trade. When they are saying patience, you need to have patience in the market. Oh, this while there were trades happening, taking place, but your own trade was to wait for the market to come back into an area where you are comfortable to take a trade. That's there in the order block. And look what happens. Price quickly reacts and falls down out of the order block. So order block is not limited to the weekly only or the chart only. It is fractal. It happens in all time frames. So I would just try to, for the concept to stick, I'll move in all the other time frames, put order blocks and try to our land break and retest and a fake breakout, map them into these order blocks and see how we could have taken trades. So the concept, first concept was break and retest. The second concept was fake breakout. The third one is an order block. Then in an order block, that's where we would want to see a break and retest and the fake breakout trade present themselves. So at the end of the day, you end up having to filter trades. If it's a retest, it has to be taken in an order block. If it's a fake breakout, it has to be taken in an order block. So you are filtering trades with using your system. So let me use the other EU examples that I was talking of, and we want to see if they were in an order block. So I talked here of there was a fake breakout that I did. I would want to check if it's in line with the what I'm saying, if it's in an order block. Right, here we are. We did the fake breakout here, there, and there. Right. So let me go to higher time frame. Right. Let's find an order block left of our chart. Right. We said an order block is the last opposite colored candle before the displacement took place. Which displacement happened? In this area, this is our order block. Then let's check what happened. Price dipped all this way down here. So in this area, this is our order block. This is an order block. And this is an order block. But this one is of more significance to us to use. Why? Because on this day, there was a fake breakout you were anticipating. So let me put the order block. That's the order block there. Right. And we said all our trades will filter them to be taking them in an order block. Right. Right. Price on this day has not yet touched our order block. It's near our order block, so it's not yet a trade. To those who would have started taking a trade here, yes, we start taking a trade there, but it's quite wrong. We have to wait for the price to dip in the order block. So we are waiting patiently for the price to dip into the order block. Price goes down into the order block. You are now anticipating a trade when the price is in the order block. But what concept are you taking the trade with? The two trades that I talked of, there's a break and retest trade or a fake breakout trade. And we were talking that EU higher time frame has been selling. So this is how you map up and come up with your trade. We have the higher time frame trend saying sell. We have the order block which price ran away from here and it's now being retouched and retested again. And we have a fake breakout concept. So mixing these concepts together, we map up and come up with a trade, a sell trade there, then you take your sell trade there. So these concepts, they all work in other charts, like binary volatilities, they all do work. I'll go there, then I'll show you some of the examples. For now, let me find another example where we use an order block, find our fake breakout or break and retest test, the fake breakout or retest trade, right? There's another one here, so I'll delete this. For you to see, let me just be deleting all the indicators that I'm using. All right. So I would want to come and do this one. I did an example here of a retest there. So I would want to find an order block so that it doesn't look like I'm cherry picking a trade. Right. So I'm using this day and I'm using this retest here, and you would want to note the order block. So if I zoom in, there's an order block there. All right. This is a 1 hour order block. This green candle there, that green candle, this one, that's an order block. Why? This whole movement down, it's a bearish candles down, and the last opposite candle before this displacement is this green candle. That's our order block. So we said a break and retest concept and the fake breakout concept, we need them to be taken in an order block. So this is our order block. And when price is coming back, it dips into the order block and gives them that entry, this entry over here, that will be now your entry. So mixing these three concepts that I have said, you can be profitable, not using any indicator, but just only noting the order block and the concept that you would want to apply and the time frame what's happening. So this is a sell that you would take using the break and retest concept in an order block. Right. Let me find another example just for those that would want to see the examples. Right. So I did another example here of EU trade. So I would want to use the order block concept on taking the trade. Right. This one, now zoom in. Right. I talked of this trade. I talked of a break up, then a retest. And I said order blocks are found in every time frame. Let's zoom in there. So you're expecting a retest on this line. And we said you take your trade in an order block. Look at what the market maker does. This bullish movement up, what's an order block? It is the last opposite candle before the displacement. These are green displacement candles. They are going up. So what color were you looking for? You're looking for the red color. This is the red color. So let's mark our order block there. Right. So we have marked our order block there. Right. So in line with this retest, a retest has to be taken in an order block. Market maker did these orders in here. This whole buy to this upside, he took his orders in here. So when price goes up, comes back to retest, the moment the price touched this line, you are anticipating a trade. And it came back to retest in this to touch this order block. Touch of this order block, you're waiting for your sell, for a buy, sorry, then you take your buy, price goes up. All right. Can I do another example? So others would be asking, does this concept work in binary volatilities? So let's go to binary volatilities. Then I show you, all right. This is binary. The concept work, guys. So I'll start from the higher time frame, V75, right? Let's work with this big displacement here, this buy, this big green candle, and look at where the display, where it came from. It came from which red candle? It was this big candle. This was our order block here. Never mind about this one. There's not much price action, but because of this big candle, we use it as a one thing. We use this one as our order block. We would want to use those concepts, break and retest, and a fake breakout, just to map up and come up with our trades. This is V25. All right, there. That's our order block. So when price went up, we were not chasing price. Price does its stuff there, then dips into this order block. And look what it does, it goes up. So we'd want to zoom in this area and look what type of trade were you going to take in this order block. We talked of those two concepts, a fake breakout and a break and retest. So in this order block, you are now waiting for what? For those concepts to pan out, then you take your trades. Let's go to the, all right, for, since it's a big time frame, let me put a small candle here, a small gray area here. I'll paint that blue for us for reference, for us to be able to. So I would want to delete, right, I would want to delete this big order block, this candle, this rectangle, right? So we want to zoom in and go to that paper box and see how you could have applied those two concepts, a break and retest or a fake breakout using the highs and lows in the H1 time frame. Right, here we are. Right. Unfortunately, if you're using your phone, you will not clearly see this one. All right. But left to your chart, there were highs which were broken. Right. These are highs which were broken. If I had to go into the 1 hour time frame, unfortunately it's not on my PC, you would see this concept, this phenomena. These are H1 highs back then. Just for reference, someone to ask, what are you talking of? Wanted to show you these highs. It's not loading. Right, here we are. So these were highs being made with by V25, and they are used for in the following weeks when we were talking of the break and retest concept. And these were highs made and they were broken here, and price actually retest again, then goes up. Then in our weekly order block, look at price, what it does in our purple, in our blue area that we had marked. Price comes and dips and tests again a broken high and zoom and starts to be bullish and goes away from the area. So it started from the weekly. Sorry, I'm going to the monthly. It started from the weekly time frame where we marked our order block, the one that we marked. Sorry, I deleted it. Then we zoomed in, we looked left to our chart, there were highs which were there. So in an order block, we talked of a break and retest and the fake breakout concept. That's how we would have applied it there. Then you would have taken this buy using a break and retest concept. Then up it goes, you're holding up to there. Then up there, there's something that I've noticed. There's an order block there as well. All right. So order blocks are marked in gray for us to know if it's an order block. This candle, green candle, why is it an order block? There was a displacement of these bearish candles until they reached here, and price, when it's now retracing back into the order block, the market maker took his sales in this area, and now this is now an area of support and resistance. We're expecting a reversal or anything in there or a trade. We don't know yet, but we have to zoom in when trading, and we are waiting on the 1 hour chart time frame, and we are waiting, and look what happens. Price on this day dips into the block, then comes back out. But what concept were we using? What concept were we using on that day? So we note the high and low of when trading, we have to note these highs and lows of each day. Right. That's the high made on this day. So on this day, you are not yet a seller, you're still a buyer. But you are now anticipating a reversal. Why? Because we are now near an area of an order block. We are now in area of support and resistance. An order block is in support and resistance. This is the area where the market maker was taking his sales, and the price has dipped back into that same area again. And we have a high. And if you recall earlier, I said above highs or below lows, their stop loss is hanging. So this concept is a fake breakout. Market opens and runs up. This is suspicious, must be suspicious to you. Why would the market break up? Will it retest and keep on going up? Yet we are now in an order block. So this is now where you are using your 60 cents as a trader. You are in an order block. Market is presenting you a high near an order block. That's a fake breakout. Price is not breaking this high to go anyway. This is your sell trade. So we'll talk of how you enter these trades in a safety way. We'll zoom in lower time frame and we'll discuss that. I think on our next Zoom meeting, I'll be now talking of how you take your trades in these small areas where you'd want to get to, where you would want to enter in these weeks that I will be able to share with you guys how you take your trade in there. But for now the concept is taking a trade in an order block above this high and taking a trade in there. That's how you trade, then take your sell in there, then you're holding in there. And look what happens again when price is now falling. So I'm keep on using on VIT25. Seems to be working with the right. I'll go to the daily. Right. There's another order block which is here. This one is a bullish order block. For this displacement which went up, the order block was this red candle. So when price was dipping into this area, we're now expecting price to show signs of it returning up, a reversal. Then we do the same thing again. We go to our 1 hour time frame and we put our highs and low of the day and be waiting for price to present our two patterns that I talked of, a fake breakout or a break and retest concept. Here we are. Right in this purple area, what concept are we to use in that area? We not left of our chart. Right, there's a broken eye there. This one wasn't much of a clear, good example of how it panned out. I think just checking the price action in the order block, then you would have come up with your trade. Right, then one more example I will do is V75. So, sorry. So these concepts work on all charts, guys. All right. Right. So on the daily, so let's just go for on the 1 hour and not the break and retest concept. So there was a time I was telling guys sell V75 because I had noticed this. All right, here we are. On this low made, price goes up, makes this high, comes back down. Maybe you're not trading here, you have not seen a trade, but look what happens when it makes this low. It comes back up to test the broken low. Nothing fancy here, just only one line giving you a trade. This is a retest that you could have taken there. If some people don't hold V75 for long, but taking a retest there, maybe you try to hold it for some couple of pips, then you get out there for your scalp. And when it comes back again, maybe you're already out. Let's zoom in again. A retest. Let's go on every low made. Let's put a line. This is another low made. What happens? Price breaks the low, goes down, comes back to retest again. So that's another trade there, a retest there. You take that trade. Then adding our concept, you find an order block there, and already it's in an order block. This candle is an order block for this whole displacement. Never mind about this small little one, but you have to incorporate the two of them as a one order block. Then you mark your order block. Then you're taking a trade in an order block, having a retest. This one. There. That's an order block. So it's testing this broken low, and it's testing in the order block. So when price was now in the order block, you're now anticipating a sell and you're checking for the price action. We'll talk about those one in the next concept on how to take these trades on the lower time frame for you to get a good entry, for you to avoid stop bounce. Then you take your trade in there, down it goes. So for scalpers, there was a scalp trade that I took. There was this low there, right? I hope you're seeing what the low that I'm saying. All right. This on the black line, this low made here, price goes up, comes back down. Look at the the touch it was doing on the broken LOD. So these are your retest. So I was just scalping in the retest, check your price action, get in there, get your couple of pips, get out, do the same again on this line. And there's an order, there was an order block there. This is the order block there, right there. So with time, you end up your eyes noticing these things without needing anything to even mark. By just merely looking at your chart, you will see a retest, then you take it. Then there was another one here, but this one didn't quite actually pan out very well because price didn't actually touch the the line. So it was, I didn't take it. I was waiting for it last night, but it didn't come out, so I didn't take it. This is the trade. It didn't really actually touch, but the touch the retest, then the price just quickly rushed down. So it works, guys. There are many other charts. Okay, fine. Just another one. There again. That's a broken high there. This is a high made on this day. Price goes down, goes up, plays around, then it goes up, comes back to retest this broken high. So before you trade, try to look for on the left of your chart to look for these highs and lows broken. So the concept, just a recap now, I'm about to close, guys. Just a recap. Each day, trading day that you are trading, try to put the previous low and high of the day and not any reactions taking place on those lows and highs, and look for order blocks to base your trades on. For the sake of time, I will not add much more, but when we meet next time again, I will add another concept which is called the breaker, on how you incorporate it on your trading. Then I will add on to the Fibonacci retracement through how you will use it. So ICT, when you're studying it, there's a lot of stuff the guy talks of, but I only realized that what you really need to be using and knowing, it's only these lines and only the order block and the breaker and the Fibonacci to base all your analysis on. Though you add more fancy stuff, but I realized you don't need that. This is the simplified ICT version of how you just use it. Using these lines, an order block, a breaker, and we add the other concept on the next platform. Thank you guys for having me. If there are any questions, please, Brombo, can you allow the guests to ask if there are any questions?
Okay, thank you so much. There's just I'm gonna pick just two questions. One question
Yes,
says, this one it says, I'm seeing that you are only marking the body of the candle. Does it mean that we ignore the wick?
right. Oh, yeah, thank you. That's a good question. I get that question a lot. Because of price action, the wick doesn't really give you the price action, how the market maker was doing his orders. It's advisable to use the body. That's how you can filter your trades. There comes a time that the wick will work. That's another time. But to me personally, I would encourage you to use the body, because that's where the price, a proper price action really worked. That's the proper the body. That's where the price action really works, like there. So the weak, you would rather ignore it, but use the body, because that's where the market maker was doing his trading, his buying and selling. There come a time where it's exceptional. A week would trigger your trades, and you'll be waiting for them to be in the order block. But it's better to filter your trades that way, so that you will not end up losing money. Better to use the body. That's how I use it. Thank you. Any more?
All right, thank you very much. One last question.
Yes, sir.
Okay, it says, what is the area of taking your profit?
All right. Area of taking profit. Uh, I'm still yet to discuss this in the next concept, but this one is more of how you enter in the market, because I realized many people would want to know where to take a profit. That's very correct. But if you know where to enter, usually that's the best you can ever start to learn. Learn to enter correctly. The profits I would discuss in the next concept. You're using a Fibonacci tool where you are using your next where you try to use or take profit. But let me just say, on the weekly, say I'm trading on the weekly, because the market maker we now know is where the place where he takes his orders. It's in order blocks. So it's, if you are trading in the weekly, it's advisable that when you are taking your trade in an order block, bigger order block, let it then be the same weekly time frame you are going to take P in the next order block you're going to find. Like in this instance, V75 is falling, which is the next area that I would see an order block in the weekly time frame. So this is the order block that I'm seeing here. Let me mark it. So that would be likely be my TP area. I'm not trying to be over ambitious because V75 can do anything, but that's the ideal idea. Because market maker is taking his trades in an order block. You took your trade in an order block. Same applies. Wait for it to get into an order block, present a reversal in the 1 hour time frame. Those concepts that we talked of, effect breakout or break and retest. When you are seeing those signs, you are take your money, run away. I hope I've answered that. I've answered the question. With time, I'll add on with other concepts where you're using a Fibonacci tool, a Fibonacci extension. Yeah, then you use that tool to know where you're expecting your trades, your tick P.
All right. Thank you very much for the nice meeting. Thank you so much, guys, for listening. So I'm going to end the meeting and post the video on YouTube. Thank you so much, Mr. Brooklyn, for a nice presentation of order blocks. I learned brand new things. So thank you very much, guys. I think we need to go and test this knowledge and improve our trading.
Yeah.
Thank you so much.
Thank you, sir.